102 on euro dollar. The euro's under pressure, down 0.5%. Brent at $75 a barrel. Oil falling 1.2%. So a change of direction in terms of oil prices after the strength that we saw yesterday, and largely down to the removal of the tariff threat around Canada and those oil exports, at least for now. Gold at 2,815 per troy ounce, just up slightly so far in the session. Let's get the Asia market reaction then to what we know has unfolded between Beijing and Washington. Avril Hong standing by in Singapore. Avril.
Yeah, Tom, the U.S.-China trade war, as you say, has begun. That deadline from the U.S. came, went, no signs of any conciliatory tone between the U.S.-Chinese presidents or reprieve on the tariff front. And I'm sure you'll get into some of the details on China's retaliatory action with Min Min in just a bit. But I thought I'd highlight the point that MLive's Mark Cranfield has been making on the blog, in that Chinese authorities' response has been quite telling, in that maybe they themselves don't see Trump backing down when it comes to tariffs. Amid all this, we see how major indices in the region, including the Nikkei, very quickly paired gains from earlier on in the session. Dollar China, you're talking about the offshore renminbi here, hitting session highs, but really remarkable how the Hang Seng managed to retain most of its earlier gains, as did the Hang Seng Tech. A couple of positives that Chinese stocks have going for it. The idea that maybe coming back from the long holiday, Chinese authorities, now that they have a clearer picture on what they're dealing with as far as tariffs are concerned, might be more confident in bringing out the big guns for stimulus. Then most of the economists that we've spoken to have also said 10% hit from tariffs. That's something that China's going to be able to absorb more or less. And then for tech in particular, they also have the DeepSeek narrative going for them. So even though we're seeing a bit of sentiment hit, it's really interesting how Hong Kong shares have managed to retain their gains, and we'll be really closely watching how onshore markets reopen tomorrow. Tom.
OK, Avril Hong in Singapore. Thank you very much indeed. Yes, mainland markets reopening, of course, tomorrow after the Lunar New Year. Does it change the calculus, as Avril was suggesting, around the fiscal response from Beijing? So President Trump's 10% tariffs on Chinese goods are now in effect. We've just learnt as well that China is imposing retaliatory tariffs against the US, also announcing it's investigating Google over alleged antitrust breaches. Let's get the details then with Bloomberg's China correspondent Min Min Lo, who's been passing all of this for us. Min Min, what has been announced so far from Beijing?
Well, as you said, that antitrust investigation into Google, as well as a series of tariffs, 10 to 15% on American agricultural machines, as well as oil, coal, LNG. A couple of American companies added to this unreliable entity list, and also export control on tungsten-related materials, materials used for solar panels, semiconductors. Very precise, very targeted measures, although not extensive, but it shows that China is not going to back down without a fight. Now, some analysts had expected that maybe China will not retaliate so quickly, and clearly this is a very highly choreographed move, given that China had waited exactly until after the tariff kicked in at 1:01 p.m. local Beijing time before announcing these series of coordinated measures. And this comes as Trump had said he plans to speak with President Xi within 24 hours. That was several hours ago, and he said that if no deal is reached, that the tariffs could be, quote, very substantial. So 10% is just the starting point. It could go up or go down from there, depending on how negotiations go.
Yeah, China and Beijing clearly had a ready-to-bake response, didn't they? Quick, swift and targeted, as you say. Oven-ready response from Beijing. Where do we stand then on those talks between China and the US?
Well, there's really an infinite number of ways that negotiations could go. And one thing that China could do is maybe to return to that starting point of the first trade deal that was struck with President Trump in his first term in office, committing to buy maybe a certain number of, a certain amount of American products in exchange for other things that they want, for instance, more market access into the US, or perhaps being able to buy what they want to buy, including advanced semiconductors, for example. President Trump had said that the reason for imposing these tariffs include fentanyl China producing the ingredients for that. And this is perhaps an off-ramp that could be offered to China, because that is a low-hanging fruit. It's something that Beijing could very easily clamp down on if it so chooses to. This is also something that both countries have already began working on. So that's one possible thing. But again, many of these measures, they're not that easy to undo once you're on an entity list. It's not that easy to get off it. So it remains to be seen how those negotiations will go. It's a really a trade war that could escalate further, and we'll have to see what happens in the next few days.
Yeah, certainly Trump has threatened, hasn't he, additional tariffs on China, depending on how those talks unfold. China correspondent Min Min Lo with a great breakdown of the Chinese response to those 10% tariffs, of course, from the Trump administration. Min Min, thank you. President Trump, meanwhile, agreeing to delay 25% tariffs on Canada and Mexico, at least for a month. That's after both countries agreed to take tougher border control measures. Mexican President Claudia Sheinbaum promised to send 10,000 National Guard officers to the border to stem the flow of migrants and fentanyl into the US.
In terms of trade, my proposal was the same one. Why don't Mexico's Secretary of Economy and the U.S. Secretary of Commerce work together so that we can also get results and learn about these issues? Then he agreed, and at the end asked me how much time I wanted to put on pause. I said, well, let's put it on pause forever. And he asked how long. I said, let's put it on pause for a month. And I am sure that in that month, we will be able to have results. Good results for his people and good results for Mexico.
Let's get more then on how markets are reacting to this latest stage of the US-China trade war. Mark Cranfield from Bloomberg's MLive team joins us with the market reaction. Mark, what does this mean for the yuan? The offshore yuan right now under pressure, Chinese assets in focus. Does a fiscal response from Beijing offset pressure on Chinese assets? The market reaction to this move?
Yes, I think you have an interesting situation here where on the one hand, there's clearly, traders will believe there's no incentive for China to allow the yuan to get stronger. As long as it remains on a gradual weakening path, that will be where investors expect it to continue to go, given the amount of uncertainty, whether the United States will retaliate more or China will do more. The net result will be that the yuan can continue to stay on a weakening path. In the background, you have a different scenario for Chinese equities. Clearly, there's already some differentiation going on here where people are picking up on the fact that the progress China has made on AI, particularly related to DeepSeek, it looks as though it is going to benefit some Chinese companies, regardless of what the US does. And you can see the performance of companies like Alibaba. Their shares have been doing extremely well. They have results out later in the week, which people will be expecting will underline the fact that they're in a different league compared to some of their American competitors. So already there's some signs here, and you can see that the response of the equity markets, Hang Seng Tech Index is still up 4% on the day, even after tariff imposed by China just a couple of hours ago. So something is happening here. There's also some expectations that China will get the big bazooka out. They will stimulate their economy when they come back from the Lunar New Year break. So equities may be able to diverge from the US markets. At the same time, if they do keep the yuan relatively weak, that will help the sectors of the economy that are still able to export around the American measures as well. This could be a win-win for China assets in that point of view. However, there are, at any moment, investors will be expecting there could be a response from Donald Trump or from other parties, and things are very volatile and fluid. But certainly, the net result here clearly is that the dollar is very firm. Traders are not going to give up on their long dollar positions, and that would include against the yuan and other emerging market currencies.
OK, Mark Cranfield from Bloomberg MLive's team in terms of the pressure valve of the yuan, potentially further fiscal stimulus, and of course the catalytic effect of DeepSeek on some of those tech-listed names as well. Mark, thank you in terms of how Chinese assets are and could perform as a result of the trade war and the step-up that we're seeing. Now, the CEO of Hapag-Lloyd, one of the world's largest shipping companies, has told Bloomberg he expects US tariffs to have a limited effect, at least in the short term. Rolf Haben Jansen also said trade always finds a way to overcome disruptions. He's been speaking to Bloomberg's Oliver Crook.